keep you updated on the capital and financial markets, here is a recap of what happened. Hong Kong's asset and wealth management industry slows sharply. Hong Kong's asset and wealth management industry's asset growth decelerated to just 2% in 2021 from 21% in 2020 as inflows slowed sharply, according to annual survey findings by the Securities and Futures Commission. The city's asset and wealth management industry had 35.5 trillion Hong Kong dollars of assets under management at the end of last year, up from 34.93 trillion Hong Kong dollars at the end of 2020, the regulator says in the survey results published on the 20th of July. Net inflows dropped off markedly, growing only 6% year-on-year to 2.15 trillion Hong Kong dollars after a 22% jump between 2019 and 2020. The SFC did not provide any reasons, but investors likely hit the brakes, spooked by rising market volatility, slowing growth in China and anticipation of rate hikes in the US to combat inflation. Sebi proposes rules for platforms providing execution-only services in mutual funds direct plans. Markets regulator Sebi on Friday proposed a separate framework for platforms providing execution-only services in direct plans offered by mutual funds. Assets management companies provide a separate plan for direct investments which are not routed through a distributor. At present, there is no specific framework available for technology or digital platforms to provide execution-only services in direct plans of mutual fund schemes and obtain data feeds with respect to such transactions. SC stresses importance of financial education, planning amid current environment. Financial education and better financial planning have become more important than ever to help Malaysians in managing their financial future, said Securities Commission Malaysia Chairman Datuk Seri Dr. Awang Adik Husin. He said retirement security is one of several significant long-term domestic issues that the nation must address. Even before the pandemic, Malaysia's retirement security was a major issue. Unfortunately, COVID-19 has exacerbated the problem. Adjustment of the base rate. The Hong Kong Monetary Authority announced on the 28th of July that the base rate was adjusted upward to 2.75% with immediate effect according to a preset formula. The base rate is the interest rate forming the foundation upon which the discount rates for repurchase transactions through the discount window are computed. The base rate is currently set at either 50 basis points above the lower end of the prevailing target range for the US federal funds rate or the average of the 5-day moving averages of the overnight and 1-month Hong Kong interbank offered rates, whichever is the higher. Following the 75 basis point upward adjustment in the target range for the US federal funds rate on the 27th of July, 50 basis points above the lower end of the prevailing target range for the US federal funds rate is 2.75%, while the average of the 5-day moving averages of the overnight and 1-month HIBORs is 0.79%. The base rate is therefore set at 2.75% according to the preset formula. We are pleased to announce that FIMM has refreshed its website along with a new contact number to serve you better. FIMM is looking for people who are exploring career opportunities. For those who are interested, send in your resume at career@fimm.com.my. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.